In this video, we are going to be analysing target ticker TGT. Now, we are down nearly 14% on the day. They have just had earnings. Not the best, but also things to know and why kind of it's selling off just so harsh. And it's really so significant increases in debt. Obviously, in this market environment, interest rates are very high. And also any new debt they're taking on is obviously going to be at those higher interest rates. So even if older debt maybe hasn't increased in rates just as of yet, it is a bad sign if their company is having to take on debt. Because it is also showing maybe their cash reserves are a bit weaker if they're having to take on debt in a high interest environment. But also they did also state that organised retail crime across our business is increasing, which again, if that's saying that, it's going to probably mean a lot of theft is happening, and obviously all that's going to do is really eat into those profit margins. So again, a big fundamental reason for this sell-off. It was quite actually interesting to see it wasn't a gap and go. Obviously we opened up, that has been the low of the day. We are starting to pull back a bit. But anyway, what are going to be the key levels we're focusing on target? So as of right now, again, a bit more bearish on the stock, and we have a target of 140. Again, this is statistical mean on both the 6-month and the 1-year chart. And the reason this is going to be our main target is when you look at stocks in a mean reversion sense, this is where we expect the stock to reverse to. So as of right now, we've hit off our first deviation on both the 4-month and the 1-year chart. Now we are starting to get that strong sell-off, and again, that would expected to take us to our target, which would be 140. Now, once we get there, if we were short, again, that's when I'd probably be covering any shorts I did have. And again, I would be getting out of any position I am here, because this is when direction becomes unclear. When you're at statistical mean, again, that is considered fair value. Once you're at fair value, we like to wait for it to move to even an extreme of either side, and then again, we can start trading it at a high probability setup. But, so that is our target. Well, what else do we need to be paying attention to? So 171 and 176, these are our first deviations on both the 6-month and 1-year chart. Now, what's interesting with this, and again, we say this in so many of these videos, what happened coming into earnings? We crashed. Okay, do we know it's going to crash coming into earnings? No. But what we can do is find probabilities and is the odds in our favour. Now again, these are technical setups. In trading off standard deviation, this is technical. Yes, a lot of algorithms and kind of smart money use things like standard deviations to find price targets to buy and sell and all of that. So we know usually where volume is going to increase. But what we can also find is if here is a high probable level and kind of a target, once you break through here, you're becoming a bit more overbought. We can trade and we can think of the stock more bearish. If we were trading it normally as an intraday trade or a swing trade, we would be more bearish coming into this. Again, you may not hold it because obviously earnings seasons are coming in and we expect big movements. But this is when it can be a good thing. And again, just observe it. Maybe this could be a good time to be buying options before the earnings, again, for future plays. When you're coming into earnings, you're at a significant level, as we are. We're at our first deviation on the 6-month and the 1-year. And we know, okay, the puts are going to be, say, $100 for a $5 strikeout. Okay, we can say, okay, we're happy if it goes up, if earnings comes out, it doesn't move or it spikes up. Okay, we can lose that 100, we can manage that. But in the case like this, where earnings comes out and it's playing against a key level, or I guess playing with the key level, then it's going to make those moves even harsher. And again, this can just really be the things to observe. How can you trade it? How can you make money out of this? Again, trading is all about probabilities and risk management. Can you get good risk to reward? Maybe trading it through an options. Again, trading it through shares can be a bit risky unless you're hedging, maybe with a call. But could you have been playing options on this? Would that have been profitable? I mean, we can quickly pull up the option chain. How did the puts perform? Okay, again, we said we could go for maybe a 5 strike out. So again, we were around 1775, you go 5 strikes down, they're up around 150 to 100% on the day. And again, how much would you have risked? 80% of that position? Again, these are the key things to be observing. We know, okay, cool, we can risk, say it is $100. Again, obviously you can buy more contracts, but let's say we're risking $100. Cool, we're risking 80 of that dollars. We now know in future around $80 to $90. We're going to risk to take that trade. What's our upside? where we have an upside of around 100 to 150. So yes, earnings may be a 50-50 gamble, but are the odds in your favor? Yes, you get a good risk to reward. Can it make sense trading it? Then again, up to you. But it's just things I want to point out, start observing. Again, things that I'm noticing more and more frequently is sometimes you can now actually get really good risk to reward on some of these trades. Now, what are key levels though, apart from the ones we've just stated? And again, these are probably going to be a bit more longer term because again, it is a large cap stock. We're not going to hit past these levels probably in the next week or so. So what is going to be our longer term outlook? So if we're more bullish, we have a target at 202, 211, 235, going through there would be 247, 266, and a final target at 283. And onto the support side, what are key supports? We have one at 108/105. If we break that, we're looking at $76/$70, and a final level taking us down to around $45 and $35. Again, yes, there is a lot of levels on here. Do you need to pay attention to all of them? No. All you ever need to do is pay attention to where we are now. We're currently at $150. The only thing then you need to pay attention to is $170 and $140. Again, you can trade the opportunity coming into these levels or just wait for confirmation if you're trying to play the directional ones. And what I mean by that is, for example, if you're waiting for that 140 move, you're more bearish on the stock, again, you don't have to trade that potential bounce of this level and instead wait for a break. If you come back to retest this as a resistance and it holds, that's a good indication that will continue down. We could break down to that 52-week low and push down to really that 110. On the other hand, you're more bullish on this stock, let's say, you probably want to be waiting. You'll probably get a pullback coming into this 171/176 area. But again, it doesn't mean that's going to be a reversal point. Definitely could be, but it doesn't have to be. And so if you end up breaking this and you're bullish, again, wait for that break, come back for that retest, and if it holds, it's a good indication that will continue up, and 202 would then be that target. And again, this is one of the things why we wouldn't have been bullish on target before the earnings. Why would we have been? Just came into a resistance, so if anything, we're more bearish on it. On the 6 month, again, we never got that retest. It broke over, and again, we said we like our retest if we're going to get long bias on it. We want to come back, pull back, retest that level as a support, and if it holds, get long. Again, broke through. You just came into the resistance as well on the daily, waiting for that pullback, as you kind of got over here. But what happened then? We just sold off very sharp. So again, it would never have been long bias on this stock as of now because we never got that confirmation. So again, things to start looking at, things to start observing. Again, we have provided you all the levels, and these are just things I mean, longer outlooks. Let's say you're not trading as a day trader, you maybe not even trading as, let's say, a week or 2 week outlook. If you're trading multiple months out, then these are when these levels can be very helpful to you. If you're, say, an options trader, you're looking for a 3 to 6 month outlook, what strikes are you picking? Again, you probably want to be finding cheap premiums, and if you're going that far out. And again, if we're looking to the upside, we're looking at around $200 as a strike. If you're looking to the downside, probably 110. So again, you can use these levels in many different ways. We give you these levels because if you go back and check, this is where volume increases. This is where institutions are looking to start taking trades. And it may be because they have to. Obviously, banks have to buy and sell certain products. And when are they going to do it? Usually coming into these key levels. Again, banks and institutions use standard deviations. Again, it's not going to be their only reason for buying and selling, but if they're forced to be buying a stock, they're going to be usually waiting for some sort of these strong levels, and that's why you see such volume increases. So these can be great ideas, just things to start observing. How do the premiums, if you're trading options, for example, how do premiums come into this level? Can you be trading to these levels? How long does it usually take to hit these levels? All that kind of stuff. But again, if you're more of a day trader, swing trader, you're just focusing on the near one, so the 140, the 170s. If you're more of a longer term trader, again, 110 to 200s are going to be more of your focus. And just for any longer term movements, again, if you get very good or bad news, we may break massively to one side or the other. And again, it's just better to be prepared than underprepared. Anyway, I hope you enjoyed the breakdown on target. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.